Hello, this is the Tradesight Stocks and Futures Market Preview for Thursday, the 10th of November, and technically Friday, the 11th, 2016. Keep in mind, Friday is Veterans Day holiday. Banks are closed. The stock market should be closed, but they don't do it. So the stock market will be open, but very light trading, most likely, should be anyways. Obviously, we've seen some extra volatility here in the last 24 hours with the election being over, so it's hard to say if Friday is going to be the usual boredom or not. We'll probably won't post calls to the stock report, but we will make calls in the room if we see fit on Friday. In the meantime, let's take a look at the ES. This is the S&P futures front month contract daily chart. That tail is real. This includes the overnight trading, so that's where the futures got down to as the election results started to turn, and then they rebounded, and we ended up opening just slightly down for the day. We'll look at the intraday action in a minute, and then this puts us up at 2157.50 or so. Futures showing down a couple points right now after the market. So what's interesting is this bounced us off that red static trend line in the process of the overnight dump. Now here's the QM. This is the oil contract up 30 cents to 45.27. This is gold up $4.40, having been much higher, hitting the green static trend line almost overnight. So the S&P gains 23 points on the day. Again, this just leaves us, unfortunately, in the same range we've been in since July. NDX is up 20, not much there. SOX is down for most of the reason that the NASDAQ side was even up, though, is that the biotech's got a huge bounce out of this market, plus 200 out of the election. I mean, plus 245 points on the biotech index. That's a huge upward move in bios. The VIX was dropped $4.36 to 14.38. Here's the thing you got to watch: the trend closing at 0.45. I had just talked about the fact that we were going to drop a fairly low number around 0.65 off the 10-day moving average. Well, this was a lower number, and so that brought the moving average down, and now we're at 0.84. Remember, anything under 0.85 on the 10-day moving average of the trend is usually a sell signal. It doesn't happen often. Happened early in July, and it happened in the middle of February this year, and both times led to plunges, or tops at least, short-term tops in the market. Here's the other story to tell. Big news here was on the treasuries, the bonds. Taking a look at the TLT here. Huge gap down and sell-off. Look at that volume coming out of bonds. And where does that money go? It goes into stocks initially, at least. So that's why the stock market was up for the session. Don't know if that'll hold. NASDAQ volume, 2.5 billion shares. Big volume, obviously. Advanced decline ratio, plus 1293. Advanced decline on the NASDAQ, plus 334 on the New York. Google loses $6.39. Apple loses 18 cents. Amazon loses $15.87. Netflix is down 2, just over 2. And Tesla down 488, but rebounded enough to not get a new closing low. All right, let's take a look at the 5-minute chart, the intraday action here. So again, you can see this, the gap down, which basically hit Tuesday's low, is where we opened. Remember, we were much lower overnight by almost 80 points on the ES. It's amazing it can make itself. And then what's funny is that opening 5-minute candle, the high of that was exactly the gap fill. I was commenting on that in our lab at the time. It's just really remarkable that you can exactly to the tick hit that. Then we pulled back for a few minutes, and then we headed up, and we pulled back again. And then about an hour in, started a steady climb and got a 12, but not quite 13 on that in the Comer. Remember, on Tuesday, the 13 was the high of the session. And then when we pushed up one time over lunch, that gave us the 13. And that was pretty much the high of the day. We made one more attempt and failed at that point. NASDAQ side, not quite as interesting. Took until lunchtime just to get green and barely close. It was actually in the red over lunch at one point, and then that closed. It's a little more volatility, but obviously, you know, it's going to take a couple of days for all this stuff to settle in, and where the reality of whatever this is to affect the market one way or the other. I predict we're heading down once the money stops coming out of bonds like that. But I think that the biggest ominous sign is that trend I talked to you about, the 10-day moving average of the trend closing at 0.84. Almost always leads to a sell-off in the market, at least a little bit. Doesn't have to be anything big, but, you know, a couple weeks. And I think that's the thing to look at. So we'll see what happens. Again, Friday's a holiday. In terms of economic data, tomorrow morning we've got initial and continuing jobs claims and the natty gas number an hour in, and Treasury budget in the afternoon. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and a good, what is essentially a long weekend.